Hi, friends. I would be discussing several case studies where the carbon taxes are levied. Uh, I'd be listing down the countries and I would show their calculations as to how much carbon tax per liter of the gasoline is levied on those countries, right? So, let me take an example of Sweden, then British Columbia, which is in Canada, Norway, and Switzerland. So these are the four countries which we are going to discuss. Sweden, it implemented a carbon tax in the early 1990s, and hence it showed a lot of initiative in making sure that its emissions are carbon neutral. So what the Sweden did was it applied the carbon tax to the fossil fuels like gasoline, diesel, natural gas, and heating oil based on the carbon content. So that is what the carbon tax is. No, carbon tax is about levying the tax based on the carbon content, and you know that gasoline, diesel, natural gas, and heating oil, they have a substantial carbon content. Because of this carbon tax, the reports say that this has resulted in significant reduction in the greenhouse gas emissions. It has also encouraged innovation in clean energy technologies, and the Sweden's experience, in a way, is uh, showcased as the success of Pigouvian tax regime. So we know that carbon tax is a Pigouvian tax, and often it is said that just as Sweden has done it, others can also levy a carbon tax, a Pigouvian tax, and effectively incentivize emission reductions and drive the economy to a low carbon economy. Same thing is about British Columbia. British Columbia is in Canada, and it introduced the carbon tax much later in 2008. And that carbon tax applies to the purchase of the fossil fuels or use of the fossil fuels within the province of British Columbia in Canada. Uh, they started with a modest level of tax and then they progressively increased the tax over time. What is important is the revenue which accrues from this Pigouvian tax could be used for making the tax revenue neutral, in the sense that if there is some revenue which is generated by taxing the carbon, and if that revenue is used to reduce the other tax like income tax or corporate tax, it means that essentially the consumer is not taxed at all. What is done is he is taxed on the use of carbon fuel, but his net taxation has not increased. So that is the meaning of the taxation becoming revenue neutral. There are several studies on British Columbia, and which says that this Pigouvian tax has helped reduce the fuel consumption, fossil fuel consumption, and greenhouse gas emissions, and the economy is not harmed because the effective taxation is revenue neutral. There are two more countries which has effectively used the Pigouvian tax. The Norway and Switzerland comes to our mind. Norway started implementing the carbon tax on petroleum activities in 1991, right? And again, it levied the tax based on the carbon dioxide which is emitted from petroleum activities. Because it was specifically applied to offshore oil and gas production, this resulted in the reduction of emissions from this sector. Same thing happens here also, that revenue is generated because of taxation, and that is a fantastic thing about Pigouvian taxes. The revenue is generated, so the revenue is used to fund climate mitigation and adaptation measures, and it is also used to invest in renewable energy and clean technology development. And finally, Switzerland, it also introduced a carbon tax in 2008 to reduce greenhouse gas emissions. In Switzerland, this tax is applied to heating fuels, gasoline, diesel, and natural gas, depending upon the carbon content. Same studies on Switzerland's help us understand that it is a success. The carbon tax is a success. The Pigouvian tax is a success because it has helped drive emission reductions in the country, and it has helped generate revenue for climate related initiatives. Additionally, Switzerland has implemented other complementary policies like emissions trading schemes and renewable energy incentives to support these climate goals. So that emission tradings we will be discussing later. What was discussed in this lecture was the important case studies, the important countries which have successfully levied the carbon tax, which is a Pigouvian tax.